Coming up on Market to Market. A key barometer of the rural economy soars to its highest level in 3 years. Economists say increased U.S. oil and natural gas exports would help the economy. And lethal tornadoes batter the South while persistent rains delay planting in the Corn Belt. Those stories and market analysis with Mark Gold next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, May 2 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. U.S. employers went on a hiring spree last month, providing the strongest evidence to date that the economy is expanding after a brutal winter hindered growth. According to the Labor Department, U.S. employers added 288,000 jobs in April, in their biggest increase in 2 years. The U.S. unemployment rate declined 0.4 of a point to 6.3%. Now, that's its lowest level since September of 2008, but the drop occurred because the number of people seeking work fell by more than 800,000. Remember, people aren't counted as unemployed if they're not actively looking for a job. Hiring last month was broad-based and included higher-paying jobs. Manufacturers added 12,000 workers, construction companies boosted their payrolls by 32,000, and professional and technical services, which include accountants and engineers, added 25,000 workers. Most of the latter positions, of course, are concentrated in densely populated urban areas. But a key barometer of the rural economy also revealed dramatic improvement in the Midwest.
Strong foreign demand and a diminished focus on health care reforms pushed Creighton's Mid-America Business Conditions Index to its highest level in 3 years.
Now, it was coming off some weak, at least not stellar results from the first quarter. In other words, we had some weather-related slower growth in the first quarter, so it's an improvement from that. So it was a good report looking and pointing to growth in the weeks and months ahead.
The index, created from a survey of supply managers in the 9-state Mid-America region, rose nearly 4% from March to hit 60.4 in April for its best showing since March of 2011. Anything over 50 suggests the economy will likely grow over the next 3 to 6 months. The biggest story in the numbers was a 12% jump in export orders that kept a 6-month trend alive.
Imports were up as well as businesses in the region expand. They increase their purchasing from abroad. That was up. So all in all, it was a very good report.
Factors pushing the index higher included employment numbers above growth neutral for the 4th straight month as the Midwest clawed its way out of what seemed like a never-ending winter. Managers also said wholesale prices for raw materials soared to their highest level since March of 2012, as supplies held relatively steady at a rate above growth neutral. And optimism for economic growth stretching into the 4th quarter increased 9%, as concern over the Affordable Care Act, or ACA, was greatly reduced. Of the managers surveyed, 65% indicated the ACA has had little or no impact on their operations. Despite the improvement, Goss cautioned that the index for May, while remaining strong, would not be as impressive as April.
So the jumps that we will see in the months ahead won't be nearly as great, and we could see the index move a bit lower for the month of May, but the movement down you could still move down and still have a pretty good number for the month of May.
The Dallas Morning News reports a jury awarded nearly $3 million to a North Texas couple last week who sued a drilling company over alleged contamination of their 40-acre ranch. Bob and Lisa Parr filed suit against Aruba Petroleum of Plano, Texas in 2011, alleging spills and emissions from the company's hydraulic fracturing operations had contaminated their 40-acre ranch near Decatur, Texas. The plaintiffs said the pollution sickened them, as well as pets and livestock, and at times forced them out of their home for months. Other landowners have also sued drilling companies and agreed to settlements. But the firm representing the Parrs believes the landmark $2.95 million civil verdict reached by a 6-person jury in Dallas last week is the first of its kind. The Associated Press does not appear to have reported the story, but the AP did conduct a survey last month that revealed America as a whole would benefit from increased oil and natural gas exports.
The Associated Press surveyed private, corporate, and academic economists on a range of issues. Of the 30 economists participating, nearly 90% responded that more U.S. exports of oil and natural gas would benefit the economy. According to the survey, increased shipments would encourage investment in oil and gas production and transportation, create jobs, and reduce America's burdensome trade deficit. Those opposed to U.S. energy exports believe that the move could make it more expensive for Americans to heat their homes and fuel their cars. But even those economists who acknowledge that exports could increase fuel prices in the U.S. say the overall benefit to the economy would outweigh any possible harm. Domestic energy production has risen dramatically in recent years, prompting energy companies to seek federal authorization to export crude and natural gas overseas, where the fuels command significantly higher prices. Currently, those shipments are restricted by antiquated energy security regulations. Oil and gas export guidelines have been largely unchallenged for decades because demand in the U.S., the world's largest consumer of fossil fuels, was rising amidst declining domestic production. That fueled a surge in energy imports, and few people envisioned that America would ever be in a position to export oil or gas. But new drilling techniques, including a controversial method of hydraulic fracturing called fracking, have unlocked oil and gas in formations once thought to be out of reach. This week, for example, authorities announced more than 8 billion barrels of oil have been extracted from the Bakken Shale deep beneath parts of Montana and North Dakota. So far, 7 terminals are authorized by the Energy Department to export natural gas, and 30 additional facilities are waiting for approval. Natural gas prices in the U.S. have helped reduce heating and electricity prices for residents and given U.S. manufacturers a cost advantage over their competitors in Europe and Asia. But it is far from clear that exports would raise fuel prices or eliminate the country's competitive advantage. Natural gas is so expensive to liquefy and ship overseas that the delivered cost of U.S. gas will always be far cheaper in the U.S., where it can travel by pipeline, than it would be in Europe or Asia. Exports are even less likely to affect prices of fuels made from oil, such as gasoline and diesel. U.S. crude oil prices have been about 10% cheaper than global oil prices in recent years. But consumers don't enjoy most of the benefit because exports of gasoline and diesel are not restricted. Refiners have been able to buy cheaper oil in the U.S., which has helped lower their input costs. But they can then sell their fuels anywhere in the world, which allows them to receive higher global prices, whether they sell to buyers in Boston or Beijing.
While debate continues on the merits of increased fossil fuels exports, one fact is becoming clear. It is increasingly perilous to ship crude by rail domestically. Virginia residents were reminded of the danger this week when 13 tanker cars of a CSX train derailed in downtown Lynchburg. All of the train's 105 cars were carrying crude from the Bakken oil patch in North Dakota. Nationally, the amount of oil shipped on major U.S. railways surged from fewer than 10,000 cars in 2008 to 415,000 cars in 2013. That's an increase of more than 4,000%, and most of the tank cars originated in the Bakken region, where there is limited capacity to move crude using pipelines. Virginia also was the site of a massive natural disaster this week, but the devastation and loss of life was nothing compared to Mother Nature's more lethal handiwork in the South.
My God, look at that.
A series of lethal tornadoes swept across the southern plains this week, killing at least 35 people and leaving widespread damage and massive rainfall in its wake. The destruction started in Oklahoma and Arkansas before moving east into Alabama. The storm claimed 27 lives in Arkansas and Mississippi alone. Countless buildings were ripped to shreds and trees were torn apart like toothpicks. Scenes like this were common in 7 states where confirmed tornadoes touched down.
I've heard that saying that it sounds like a train. No, it was an evil, eerie, powerful.
As residents all over the southeast clean up, some admit it could have been worse. In Mayflower, Arkansas, the violent storm left behind a massive debris field.
The tornado just ripped in, and we all looked up, and behind us the hallway and everything was gone.
The National Weather Service says the tornado that struck near Arkansas's capital of Little Rock likely packed winds exceeding 136 miles per hour.
We've obviously got a lot of experience with tornadoes, and any tornado is bad, particularly if it's a direct hit on something. But just looking at the damage, this may be one of the strongest that we've seen.
When the storms rolled through Oklahoma, Missouri, and Kansas, they destroyed dozens of homes. Eyewitnesses estimate the twister that devastated the region Sunday night was 3 blocks wide. A suspected tornado also struck north of Birmingham, Alabama, late Monday night, tearing the roof off this church in Kimberly. Other buildings suffered a similar fate, including the town's fire department, where crews were on duty at the time the storm hit.
I was standing right here and I heard a big wind come, and almost like the train. So I went back inside, and by the time I got back inside, it started coming at us.
And as if the first round of storms wasn't enough, some people had to take cover when another wave of severe weather bore down on the Tuscaloosa region. Some residents huddled in this concrete storm shelter that was built after a tornado killed 50 people in 2011, almost 3 years to the day of this week's disaster.
We went through the tornado storm on the 27th, and we did not want to relive the action. We wanted to take precaution and get in a safe place.
The system then moved farther east, dumping more than a foot of water in lower Alabama and North Florida. Near Pensacola, reports of 20-inch rainfalls were common, with more on the way. Cars were stranded as some rescue and repair vehicles tried to wade through the water. Farther up the eastern seaboard in New Jersey, high water also flooded roads and made travel nearly impossible. In New York, excessive rainfall contributed to the collapse of a 50-foot section of retaining wall in Yonkers, north of New York City. And cars were literally swallowed by a disappearing road in Baltimore, Maryland.
All of a sudden, this tree started going like that, and I said, oh my God, there goes a tree, and it just went.
Many roads were shut down in Virginia and Maryland, and emergency officials tried to rescue motorists outside of Washington, D.C. Heavy rains were welcome this week in parts of the Midwest, except for the eastern Corn Belt, as indicated by the latest drought monitor. But the story is much different to the west, according to the University of Nebraska research. The plains from Nebraska south to Texas and back west to California are still locked in exceptionally dry conditions. Nearly 50% of the country is in some form of drought, with the most severe in North Texas and Central California. Rainfall in the Corn Belt slowed planting progress this week. According to the USDA, just 5% of the country's corn crop is in the ground. That is well behind the 5-year pace of 28%. Eastern and southern states like North Carolina, Tennessee, and Texas are on schedule. But farmers in the key corn-producing states of Illinois, Iowa, and Nebraska have barely begun planting.
Next, the market-to-market report.
Grain prices were mixed this week as the rally in wheat continued while corn headed south. For the week, July wheat gained 8 cents, while the July corn contract moved 13 cents lower. Soybeans also were pressured as the July contract lost 23 cents. The nearby meal contract followed suit with a loss of $1 per ton. In the softs, cotton put together its third consecutive winning week as the July contract gained $1.07 per hundredweight. In the dairy market, May Class 3 milk gained 6 cents, while the deferred contract improved by 72 cents per hundred. Over in livestock, the record-breaking rally continued again this week as the June cattle contract gained $1.28. August feeders improved by $5.70, but the June lean hog contract lost $2.30. In the financials, the euro gained 4 basis points against the dollar. Crude oil lost 84 cents per barrel. COMEX gold advanced by $2.10 per ounce, and the Goldman Sachs Commodity Index declined by more than 7 points to settle at 651.10. Here now to lend us his insight on these and other trends is one of our regular market analysts, Mark Gold. Mark, welcome back.
Thanks, Mike. Nice to be here.
It's a busy week to have you here.
Yes.
Let's get right into it. Let's take a look at the wheat market. We've had a lot of winter wheat tours going on this week. How is the market interpreting all of that?
Well, certainly on the friendly side. We've got 5 bushels less than a year ago in the Kansas wheat crop. We're looking at about $1.5 billion total production on the wheat. So these are numbers that the market's taking pretty friendly. We're putting hard wheat over $8 a bushel, and we've had a nice rally here. The question becomes, is it just a hard wheat problem? The soft wheat, we're looking okay. They're going to get the soft wheat up in the Northwest in the ground. It's been a little bit delayed, but it looks like they'll get it in the ground now. And we've got some pretty good situations around the world in terms of the rest of the wheat market. So is the hard wheat in itself going to stand alone and go do its thing and maybe move to significantly higher prices because of the drought? It's possible. They're talking about 95 and 100-degree temps moving into Oklahoma and Kansas next week. That could be the death knell for this crop. I've always been one to say you don't kill a wheat crop in March or April. You kill it in May. That's when you're going to have the real problem. And if we continue hot and dry, then it's going to go from bad to really bad, and we could see wheat prices really take off here. But again, with the world situation being much better, I don't know how long that'll last.
And seeing as it might just be a hard red situation, what should producers of the soft wheat be looking at? How do you plan for that eventual disconnect between the hard and the soft?
Well, I think, if you know you're going to have a crop and you're looking pretty good out there, we've had a nice rally in this wheat market. Go ahead and make some sales into the new crop. If you're not sure exactly what you've got, you can use put options to protect the downside. So you've got some marketing opportunities here in the wheat, both in the hard and in the soft. Right now as a marketer, I wouldn't get real aggressive selling the hard wheat until you know exactly what you've got out there. You don't want to get in the position of getting real aggressive on the sell side and not wind up with a crop, which is, again, where put options can be very helpful to you.
Certainly. Producers in that situation where it's droughted, looking at 105-degree temperatures, that's going to be an ugly situation.
Very tough.
All right. Well, now let's take a look at the corn market. We did not see wheat pull corn higher this week. We saw corn on the downward slide. What's happening, both old and new crop?
It's interesting. We got prices up to $5.12 in December corn, backed it off to almost 20 cents. What's been pushing the corn up has been good demand from overseas, no question about it, but also the delayed plantings. Now, yes, we're delayed, but it's not like it was a year ago. Last year we were 5%, this year we're 19% planted. We've had some windows of opportunity. This next 6 days look like we've got a pretty good opportunity to get a lot of corn in the ground in a lot of spots. Iowa, Minnesota, Wisconsin still could be a little bit wet and a little bit chilly, but the rest of the country is going to do a pretty good job, and even I think most parts of Iowa. Iowa farmers, in my opinion, are not going to let 2 years go by with a lot of lost acres. I just don't see that happening. In any window, they're going to be out there getting the job done. But I think when it's all said and done, we will get the crop in, we'll get the beans in, and I think the market is sensing that here the last few days, that the weather patterns are shifting, and we will get the corn in the ground.
Now, that being said, as we look to get this corn in the ground, even though it's potentially a smaller crop than last year, how should producers be sold on their new crop corn?
Well, certainly once you get the corn planted, I think a pretty good marketing idea here is if you've got the corn in the ground as of today, we've had a nice rally from December corn, 430-ish back up to 510. We're at 495 roughly right now. These are still not bad prices, certainly better than they were at the beginning of the year. So if you've got the corn in the ground, I'd certainly look to be selling something here, 20, 25% of your forward prices into the fall. I'd be having some put options on for maybe another third of that. If we get the corn in the ground nationally by June 1st, I'd be buying some more puts or selling some more grain. And if we come in mid-July and we look at the longer-term forecast, if it looks like a fairly normal July out here, I would be getting the rest of it done. Because if we haven't had a year in quite a long time where we have good weather in July for the corn. We proved last year, even with late planting and no rain in the month of July, we can still grow one large corn crop. Well, if we get rains in July this year, how big is this corn crop going to be? I believe it could be pretty big and push prices significantly lower than where they're at now.
All right, and we have heard talk of El Nino coming back in that time frame, July and August.
And that should be a little bit helpful towards producing these crops, bringing some more normal rain patterns in, moderate temperatures. Moderate temperatures and good rain, we're going to see a huge crop out there.
Right, and a decent-sized drop in that December corn contract.
I would assume so, yeah.
Well, now let's take a look at soybeans on a bit of a roller coaster ride this week, particularly on Thursday where the market was down new crop 70 or 50-some cents throughout the day. What happened?
Well, it looks like people finally got the message that we're actually importing some beans into the U.S., easing some of that tightness, and we are very tight in old crop beans. But the rumors have it, they started the week off with maybe 15 to 18 million coming in to the U.S. Then it got bumped up to 22, then 25, then 28. And these are numbers that change the dynamics of the market.